Happy day after Valentine's Day. I hope you got to spend it with somebody. If not, I hope you watched something good on TV. Monday, February 15th, 2021. 2 more SPACs for your SPAC sleeve. But first, talk about what you shouldn't be doing. Just like REITs, pick a basket of SPACs to fill your SPAC sleeve for your portfolio asset allocation. So as we've talked about, there are no good REIT ETFs, so you have to pick somewhere between 5 and a dozen of the ones that you want to own, so you have your own little personalized ETF. You're doing the same thing with SPACs. You're looking for low risk that have the potential for big upside. There's not a lot of them out there, but there are some characteristics that a lot of them will have. So you invest in those characteristics and then you let things go. One thing to keep in mind, and I just mentioned this in here, is the reason that we don't include any bonds in our asset allocations is 1, they've never beaten stocks, but 2, we're at the end of a 40-year bull market in bonds and interest rates that are the lowest in 2,000 years. That's not a joke. These are the lowest interest rates in history. You've never seen these interest rates this low ever before. So why would you want bonds at the end of a 40-year bull market with the lowest interest rates in history? Really only bad things can happen. So if there's downside in bonds that's similar to the downside in stocks, but there isn't the upside that stocks have, why would you own bonds? Warren Buffett has told you the exact same thing. I'm just repeating it. Stay on the barbell. This is your equity side. This is your alternative side. If you are a retiree, you'll probably have about 40% on the alternative side, with REITs being about 20%, and then gold and pretty much gold being over here. A little bit of bank saving in crypto. I told you about that over the summer. If you had listened, you'd have tripled or quadrupled your money. Materials fit in there too, a little alter energy like the yield codes, but they're overvalued right now, so we don't want them. And private equity, if you have access to that. If you're an accredited investor and you want to talk about private equity, just get a hold of me. I've got some pretty good resources for that. But in most cases, you'll be around 15 to 20% REITs, 15 to 20% in gold and gold related, and the rest in materials and maybe some alt energy yield codes. Maybe when the yield goals come back, you get rid of some REITs, you get rid of some gold, but usually, around 40% on this side. And in fact, even though I'm a growth investor, I'm actually only 60% over here and 40% over here because I like some of the REITs. I think some of them are big bounce back potential, and it's nice to have tangible assets, right? It's nice to have some tangibility to your portfolio. So even if you're 35 years old, I think you can go with the 60-40, 60% equities and 40% alternatives, even though most of these are in equity form, right? Gold miners, it's an equity, but it's linked to commodities. REITs, it's an equity, but it's linked to a commodity in real estate. And then some of the alternative energy, yield codes, and materials, which we own a SPAC, which is really on this side, because it's MP materials, and that's rare earth. So these SPACs can end up being on either side, and it depends on what they invest in. So MP materials would probably fit into this side because it's rare earth, and then some of the banking ones or financial ones or healthcare SPACs would fit over here. So what don't I want you to do in SPACs? And I've gotten some of these questions is, should I chase this one that Shamath is in or some other guy is in? It IPO'd and it went up 60% or 100% or 150%. Okay, what's the deal? Oh, they don't have a deal yet. It's just up by double or triple already. Well, is anybody worth a 2 or 3 time premium to their peers? I think that's a pretty serious question. I love Shamath. Shamath and I agree on a lot of things. I think some of his solutions are self-interested or tied to where he was brought up and where he made money. I think the whole Bitcoin thing is the biggest Ponzi scheme in history. And I'm not saying don't take part, because maybe they make it an official part of the Federal Reserve Ponzi scheme in a backdoor sort of way. But the reality is that it's a Ponzi scheme. And why do I say Bitcoin is a Ponzi scheme? Because if more people don't buy it, you can't pay off the people that were in before. That's all it is a Ponzi scheme. There is no tangible value to it unless people keep on buying it. And if it gets regulated, and if there's a digital dollar to compete, and we already know that the digital yuan is coming, the digital euro is coming, if they don't peg those to their central banks, and I'm telling you, that's the easy solution for them to kill Bitcoin, is don't tie the digital dollar, the digital yuan, or the digital euro, or crypto yuan, or crypto dollar, or yen, or whatever. Don't tie it directly to the central bank. Have a once removed mechanism tied to inflation so that people can use your currency to buy the digital currency that soaks up your other currency, allows you to issue debt so you can maintain counter-cyclical policy. And then voila, you have a crypto asset that now can solve a transaction, can settle a transaction in a couple of seconds. And by the way, the banks who aren't making a lot of money right now, suddenly they probably become the keepers of the ledger. So right now, Bitcoin has this ledger and all these developers get a little fee for making sure the ledger is correct. What if the banks and other financial institutions were the ones charged or licensed or allowed to buy into charging that fee? What if Citadel, which is a wholly corrupt corporation as far as I'm concerned, what if Citadel down in Chicago said, hey, we'd like to buy into that system. We'd like to help clear those transactions, make sure the ledger is correct, right? So that's a way of supporting the financial industry if they introduce a federal, right, an American digital dollar or crypto dollar. So keep that in mind. So Shamath, who's a big Bitcoin guy all of a sudden, do I think he's right about that? No, I don't. Now, if he's wrong about that, he could probably be wrong about other things. Or he could just not be worth triple what some other people are. Or we take a look at Churchill Capital Corp, a rumored deal with Lucid, the EV maker. Woo! Right? Oh, I lost an E there when I edited it. $40 per share on a potential deal with Lucid Motors. Okay, first of all, there's no deal yet. So it's just a rumor right now. Second, if there was a deal, would it be a good deal? I don't think so. Can another company follow Tesla's exact business model, which is what Lucid is trying to do? They don't have first mover advantage. They don't have Elon Musk, and they won't have massive government subsidies. And now they would have to try to displace Lucid and catch up to Ford and GM and Volkswagen and Toyota and BMW and everybody else who suddenly has EVs coming to market over the next several years. And by the way, there's nothing special about Lucid. They don't even make their own battery. So a lot of these SPAC deals are going to end up being crappy deals. So you don't want to overpay. The way to make money on a SPAC deal is, like I talked about, buy them on their cheap after the IPO and see if you get lucky. And if you can set up the circumstances in the right way, more will get lucky than not. Remember this chart right here. The stock market is overvalued to a historical proportion. The other day, I showed the December chart. This is the January chart. Corporate equities are almost priced at double GDP. That means that the stock market is trading at over a 30 PE in real terms, and it would probably be cheaper for you to start a company than to buy an existing publicly traded company, especially a lot of these zombies that are propped up by the Federal Reserve. Now, superimpose that onto the unicorns and small companies that are private. Are they getting overvalued as well? I think a lot of them are, because you have this pull effect in economics, right? Push and pull effects. You have the stock market pulling a lot of prices up. So you have to be super careful. You don't want to invest in a management team with a pile of money, because that's all a SPAC is. It's a management team with a pile of money going out and buying something that's overpriced because they just want the pop so they can exercise their warrants and take their 20% for, a discount. And maybe the stock goes sideways forever. Or maybe it loses 30, 40, 50% after the fact. You got to be real careful when you pick out these SPACs, which is why I'm telling you, buy them right after the IPO when they're $10, $11, $12, $13 a share, because you don't have very much risk. If they announce a deal that sucks, get your money back. If it pops, take a big profit and maybe keep a little free portion of the position. Trade in your warrants. So make sure you read that article, 2 ways to trade the SPAC hype cycle. Here's 2 more SPACs for your SPAC sleeve. Somebody already mentioned this one. It took me a while to get around to it. And I've just decided I don't want to miss out on another Liberty vehicle, because Liberty has actually outperformed almost everything in the stock market the last 20, 25 years. John Malone finds a way to always make money in this stuff. He knows a good deal. Greg Maffei is his CFO, or has been CEO and he's been a CFO at Microsoft, chairman of Live Nation. These guys are big deals. They're money makers. They're golden gooses. I know somebody bought this last week or 2 weeks ago. So I think I'm going to buy this week. There's a disclaimer at the bottom of the Seeking Alpha article that they make us put on that says I'm not going to trade in it in the next 72 hours. I'm going to try to buy Liberty Media Acquisition Corp in the next couple of days. Why? Because I think it's cheap enough. If we get a down day, that would be great. I think it's cheap enough. I get 1/5 of a warrant for every for every share. So every 5 shares, I get a warrant. And what does that mean? We haven't spent much time on that. When you see 1/5 of a warrant, you should be thinking, wow, they didn't have to issue much in the way of warrants to get people to invest. There's even a couple SPACs out there that didn't issue any warrants. The 1/5 is basically a bonus to people, not an enticement. Now, when they issue a 1-for-1 warrant or a 1-for-2 warrant, that's basically them begging for investors. You pretty much don't want to get into these because that means that they don't have the right pile of money. They probably don't have the right management. They might not have the right idea. But these guys, they've got the right ideas. What are they going to invest in? This is right on Billboard. They will identify, acquire, and operate a business with attractive risk-adjusted returns. They've never failed. That Liberty Sirius thing was one of the best mergers in history, and we're getting in on it late, mainly because they had to rejigger it because of the pandemic, and we get Liberty Media Sirius SPAC, not SPAC, but tracker for about a 30% discount right now. So if you don't own LSXMK right now, you really should, because you're getting Live Nation for free. Now, there's all sorts of media and entertainment consolidation that needs to go on, and that's what this SPAC is going to do. I've talked to you about how DirecTV and Dish should probably merge, put their satellite network together, figure out a way to optimize it. Maybe Sirius gets involved. I don't know. But there's something that can be done in satellite. There's all sorts of streaming services. A couple of them need to merge, no doubt. There's content providers, MGM, right? Discovery, a bunch of them that need a home. So this SPAC is probably something that will help with the consolidation of the industry. It'll probably be accretive on day one, and then it's going to pop. And if they buy something that the millennials like, and the Reddit guys, the Reddit army, and the Wall Street bettors go, oh my God, this is awesome. They bought something that I like and use. Could go to the moon, could go $30, $40 a share quickly. Might not. Might just plod along, gradually grow. But this is a chance to get in on the ground level during a consolidation phase that has to occur because there aren't enough dollars in everybody's pockets to buy 20 streaming services. CenturyLink wants to spin off their consumer base. Maybe they spin off their fiber. I don't know. AT&T, right? They might want to spin off some of their old copper subscribers. People who aren't switching to high speed. There's a lot of different deals that could go on out there. You really can't find somebody better than the Liberty team to find the deal. All right, they're just not out there. The other SPAC is on fundamental trends too. This is Spartan Acquisition Corp. And these guys are going to try to get into the sustainability and smart energy space, which is something that Shamath and I've been talking about it for years now. Shamath has been too. Is a great space. The whole energy system has to change. Now, if they go out and buy a solar panel maker, I'll probably sell the pop. But if they get into some sort of company that helps with the distribution of energy, the decentralization of the energy grid, transmission, the software behind it, the switches behind it, I'm going to be pretty interested in that. And I know there's a couple software companies out there that fit the bill. So if they go out and get one of these software companies and maybe do 2 acquisitions, one hardware, one software, the Spartan could be a big deal. And this is run by Apollo. These are sharks. I mean, Apollo is a bunch of sharks. They're killers. They are. They don't leave anything. They don't leave any scraps for the little prey fish. You got to be in the deal with them. It's under 11 right now as of today, or as of Friday. I think you get this one. I didn't put it down here, but I believe you get a quarter of a warrant. Yeah, quarter of a warrant. So they're not begging for money. It's just a little bonus. So these are the 2 that I really like this week. I've gone through about 30 of them. And then there's one that's already announced a merger, and I mentioned this on air recently, and that's BFT. And they bought PaySafe, which owns NetTeller and Skrill. NetTeller I've used. How come I've used it? Because with online gambling the last 5 years, you got to find a way to move your money around. And NetTeller was a way to do it because they're not US based. So they're a big deal in money transfers internationally. And they have part of that gigantic gambling space. There is a bill in Congress right now called the WIPE Act, and it could be part of convincing Vegas not to fully open until the fall, because Vegas is pushing to open like imminently. The federal government might steer money to Vegas in return for an online gaming bill that gives control of online gaming to companies that have a legal jurisdiction in the United States. So basically the casino companies and the Indian reservations. So you'd have to be regulated by a gaming commission, like the Las Vegas Gaming Commission. What if suddenly Las Vegas was running a whole bunch of the online gaming because they have Caesars and they have MGM and they have Sands, which previously had been against online gaming, but now Sheldon Adelson has died. Who knows which way they'll go? The Venetian's for sale. There's a lot of things that could change. It could change quickly. And NetTeller is a big deal in that industry. And they're basically like PayPal. So this might be a way to get into a PayPal-like investment that's already got an international footprint. And by the way, online gaming might be coming, and they already have relationships with a lot of those companies. So if all of a sudden PokerStars and whoever else becomes legal in America again, and they use NetTeller, think about all the fees that can be generated there. Clearly worth a couple bucks. Now it's trading at about 17 right now because I think a lot of people are thinking like me, but I also think there is some hype. So if we can let some of that hype wear off, get it down in that 12 or 13 range, maybe 14, I think probably it's something to buy. It might be something to buy at 17 because I think these things are going to happen. The Democrats don't care that the evangelicals don't like gaming, don't like online gambling. There needs to be new sources of revenue for the government. They have to tap the online markets where the money is. I mean, you've seen huge amounts of money migrate from live to online, whether it's shopping or gambling or something else. The federal government is going to get its hands on some of that online money. This could be one of the ways, and then NetTeller could be the intermediary that has to do the reporting in order to have a license. Any SPAC questions, or can we make it a quick day? In most cases, you are overpaying for the warrants individually. There's almost always an embedded discount if you buy the unit with the shares and the warrant. So you can trade the warrants, but you're almost always paying a premium. You have to do the math. Any other questions? Going once? SNRG. SPNG. SPNG. I don't see it anywhere, bro. Soaring Eagle Corporation. Oh, there you go. Harry Sloan, former CEO of MGM. Well, that's a big hunk of money. $1.5 billion. A 1/5 warrant. Ooh. Oh, it's pre-IPO. When's it going IPO? Yeah, that's interesting. Good catch. Well, do you know what the IPO date is? Is it any day? So let's take a look at Soaring Eagle Corporation. Here's why. Harry Sloan, former CEO of MGM, he's a big deal. I haven't read the documents, so I don't know what they're targeting, but I'm guessing it's gaming or entertainment. $1.5 billion, that's a huge SPAC, right? Most of the ones we're looking at are 300 million to $1 billion. This is $1.5 billion. Looks like it's going to go up to 1.7 billion. Good people, big hunk of money, connected through Goldman Sachs, right? If you can buy it, just between $10 and $11, there's your gambling, right? There's rolling dice, but you can't crap out. Might come up, right? You might roll, box cars with a side bet and make a bunch of money. But remember, you just got to get it through your head that with these SPACs, when you buy them close to the IPO price, if it has the right circumstances, right? If it has the right circumstances, big pile of money, big deal people, right? Goldman Sachs, Harry Sloan, former MGM dude, not begging for money. Yeah, I like this one. I like it. I like it a lot. Good work, Mike. So I'm going to look at this. I'm going to read the S1, S4, S1, S1. Always buy the unit. Always buy the unit. Get the embedded warrant because you're generally not paying a premium versus buying the warrant separately. And then you get a chance through your brokerage to split it up down the road. Like with this one, they're saying you can split it starting on April 16th. Oh, that's completion. That's not that. Split day. They don't have split day on here. This is when they have to have an acquisition by. But you'll get a notice from your brokerage. It'll say for $20 you can split this. That's what it was at TD. I think they were charged me $20 to split up the SPAC into units and warrants, into stock and warrants, from unit to stocks to warrants. But you don't need to until you're ready to sell the warrants or sell the stock. All right, so there you go. There you go. If it's still, it doesn't really matter that they can't do it at the initially. I mean, once they go public, if they buy something with, they can go and do a strategic transaction down the road. So they'll get around this. This is basically the SEC saying we don't want you to do more than one deal at the open. Do one deal and then do a merger down the road. So the SEC doesn't want them doing multiple mergers right off the bat. Oh no, they're still looking to raise $1.5 billion. They're just going to follow the rules. Weird financial guys following the rules. Oh look, there you go. Yeah, I told you these guys are big deals. I didn't even know they were on that other deal that I just mentioned. No, so good people with big piles of money and focused ideas. That's where it's at. So, like I said, this one was just new to me a couple minutes ago. Let's take a look at it. Anything else before I go have my heart-shaped pizza? Because tomorrow was Fat Tuesday. You know what Wednesday is? For us Catholics, it means Lent, which means no sugar, no booze, no carbs for me for 40 days and 40 nights. This is how I always used to get in shape for baseball. Now I'm going to try to get in shape because I'm old and round. Round is the shape. All right, nobody else? Nothing? Going once? Going twice? 3 times? We are out of here. I will get this up on the website maybe later tonight, but probably tomorrow. Peace out.